Hey there, Futures Fanatics. Welcome back to the channel. I got to tell you, in light of the recent spectacular but widely foreshadowed, I guess, implosion of a prop firm that was offering direct funded accounts, it's really refreshing what I have in store for you today, which is an interview with Eric Schmitz, who's the founder and CEO of NexGen Futures Trader. And they're kind of carved out also offering what they call IFA or instant funded accounts. We'll get into it during this interview. But it's just great to have competency and professionalism. And if I had probably grown out a goatee like Eric, we'd have the same amount of white hair there. So you're going to really enjoy this talk. It's part of my founders interview series. Real quickly, I'm not going to edit out some of the wind noise. He made us jealous by presenting from San Diego. So he's outside in San Diego. There's a little bit of wind noise, but I think it's pretty manageable. Just want to tell you about the rules. There's just one rule, basically consistency. It's a 20% consistency rule. Other than that, all the details about their programs are on their website. Actually, the website right here is, let me see, let me just go over to it real quick. So this is their website. I actually signed up for some of these programs, as I often do. I think I said in the interview that I didn't have time anymore, but I decided to sign up for the ATLs, the Audition to Live, which is basically your standard sim account that you have to go through an evaluation stage first. I bought 3 of the 50,000. These are right over here. And then you're going to notice, anyone who is familiar with Top Step X, they white labeled it. It's called Project X, and that's what I selected. So as you'll hear in the interview, this is probably the platform of choice if you want to use this firm. I just think that again, Top Step has done a pretty good job with this platform. They've white labeled it. It's great, good to go. You're all set. You're all set there. I think the only other things to really mention is that it's not a very long talk, but there are timestamps down below, so you can jump to the part of the conversation that you're most interested in. And what I'm most excited about is NexGen, Eric, and his team decided to do a special Futures Fanatic promotion. It's down in the description below. It's 50% off either the ATL, the standard evaluation, or 50% off of the IFA, the instant funded accounts. Okay, so check the description down below. That's going to be a little bit better than any other deal that you can find anywhere else. We're just going to leave that up for about 3 to 5 days from the time I publish this video. If after that you don't see that exact same deal down there, still click on whatever links in there or leave a comment of some kind with code or coupon. I'll see if I can figure out how to make that coupon live a little bit longer, but we needed to just have it be a brief period of time. So that'll be it for this quick introduction. I know you're going to enjoy the conversation with Eric. Let's get into it. Hey, Eric, welcome to the Futures Fanatic channel here on YouTube. Thanks for being here.
Thank you very much for having me, Ron. Looking forward to speaking with you and catching up.
Yes, yes. Well, first of all, I just want to make sure I remind my audience that this is an important step when someone that runs one of these prop firms agrees to come on, and they're human. And Eric's coming to us from San Diego today, so I'm really going to enjoy this conversation. We'll get to know Eric a little bit better, and especially about his firm, NexGen Futures. So where I like to start, Eric, is just the general stuff. Tell us a little bit about your background. We both, I think, started at wirehouses, as we were talking before. And how did that lead to starting NexGen?
Very interesting. So I joined the financial world in 1993. I was a math major, got to be an actuary, and it was too boring for me. I wanted the action. The Wall Street movie in 1987, market moves always got me really intrigued. The movie Trading Places, all these planted such seeds in my head that I wanted to get involved in the markets. I got a first job at Credit Lyonnais Rouse, which is a futures arm, and I was delivering tickets to the COMEX every day. I had an exchange badge. And then fast forward 30 years, I worked for Bear Stearns, I worked for Credit Suisse, I worked for Bank of America, Citadel, Moore Capital, Schoenfeld, Gelber, all in proprietary trading roles. And I did this for almost 3 decades. And then as it was time to transition into something else, I saw how much excitement there was in trading. Trading has been such a big part of my life. I saw how much it had really blown up and how much interest was there. And I wanted to get involved more from a management role than from a trading role, and see if I could find some very talented traders out there that could manage my money and make a futures trading platform out of it.
I dig it. So lots of experience. Neither of us are kids, right? So that's
Yes.
That's good to hear. So you knew about futures in the real live world, and we'll get into how you kind of started NexGen by having an option to go live right away and cut out some of the other things. So how about how NexGen came about. Obviously, there's no shortage of choice. I mention this every time I have one of these conversations. Did you, Eric, or some of your other partners in the firm, like try out other programs and say, oh, we can do better? Or how did you do your research and then decide how you wanted to position yourself in the market?
I think just seeing how much it exploded and it had gotten so much bandwidth, whether on Twitter, X, or in Discord channels, or, just in general conversations, that we started to look into a little bit, and it kind of piqued our interest, having had a background being a prop trader at firms. And we really looked at the landscape, and it wasn't what we thought really mimicked the experience that myself and some of my team had during our careers. And it seemed as if some of the model we didn't think was so accurate to the real world, and we thought we could come in and try to create a firm that would really mimic and really get people to live trading on exchanges. And we thought that was a piece that was missing, and somewhere that we could be in our own lane and sort of create an opportunity for people to get to a point of trading real money rather than simulate it's more of a game or sort of a mentality.
Gotcha. So let's get into it. One of the things that would have probably differentiated you significantly a little while ago, and now there are firms that are doing this, is you have these two types of accounts. Actually, you have three, but I think you sort of emphasize two. So the first is like the 100% like live funded account, right? And then you have an instant funded account. I spent some time on your website, but I think we talked about this before. I used to try out all these things before and do all that. I don't have time anymore. So that's why we have these conversations. So I've had a tertiary look at your website. Maybe you could go through how those two things fit together, your instant funded account, your live account, how they're differentiated, and maybe a little bit about what kind of trader you think is appropriate for each account type.
Absolutely. So the instant funded accounts we launched about a month ago, and we've paid out over $50,000 to people already. And we are starting to put people into live futures account as a result of how they traded and their payouts thus far. That's really for someone that has a consistent trading style. We have a 20% consistency rule in it. And like I said, a lot of people have gotten paid with that rule, and it's showing that they can trade in a very consistent, disciplined manner. The Audition to Live has two stages, and the first stage has some daily stop losses, but they're soft and you can continue the trade the next day. And if you can pass stage one and get to stage two, you don't have the consistency basis that's needed in the instant funded account. And it's more for people that have a variety of different styles rather than a consistent trying to grind out a certain amount of money each day. Both ways are leading towards people to get to a live futures account on the exchanges, whereas the Audition to Live gives these people an opportunity to show us how they trade. And we look at it on a number of different metrics and see, when their own style, not on a defined consistency ratio, can they consistently make money? Not consistently in terms of 20% consistency ratio, but can their style of trading work based on the metrics that we're using to see if we can put them on a live exchange and fund them with our money. Where the instant funding, you can get money immediately. Like I said, we've paid a number of people out already, a good sum of money for only being in business for about a month with these instant funded accounts. And we are putting people onto exchanges, but they've earned the money. So we're taking their P&L, and that's part of their funding going into the position so that they can risk their money to make more money. And we have everything set up for them. So it's kind of two paths, depending on what your style is, maybe your level of consistency, your experience, and how ready you are to move on to the next stage.
Okay, so I'm on your website right now, and I get these questions, so I just want to make sure that people know. You can go to the website, and it'll answer some of them, because you've done a great job with your website, by the way. I've seen a lot of other firms that sort of hide the details in the FAQ, and it's hard to really understand what's going on. So right on this page, it's saying, if you're doing the ATL, which is the Audition to Live, that would be a standard evaluation. You can do up to 10 accounts, right? But if you go instant funded, it's just a max of 3 right now, right? Is that correct?
Correct.
Okay. And no, I just, the max of 3 accounts is, I think, an important concept to talk about, because you're a new firm, and then you use the words, guaranteed, or we guarantee these payouts. How can you guarantee that with this model and it being this early? Is it by virtue of just having a limited amount of accounts and you're monitoring very closely, or how would you describe why you selected that limitation, because we're going to get into it in a little bit. The big elephant in the room, there's another firm that had a lot more accounts than that and got themselves into quite a bit of trouble.
Exactly. So that was something that was really key for us, because the whole copy trading thing in a simulated world, it really doesn't reflect anything of reality. I mean, I use the analogy that the sim world is the zoo, and when you're on the exchanges, that's the jungle. And take an example, if you could trade 10 minis, one guy's trading 10 minis, he's copying at 20 accounts at one firm, and he's got 3 different firms that he's doing with. He's trading $12 million in notional at a midpoint price with no slippage, nothing. And that's not reality at all. You're not trading $12 million at one price anywhere in the world on any exchange. That's just not going to happen. It'll never happen. That's just not how life works. So that's not mimicking reality. We're trying to create an environment for someone to really be prepared for the jungle, where you're not going to be able to throw 10 lots out, copy it across 20 accounts, and have this huge notional out there, and you can quickly make 3-4 grand. That doesn't happen in the real world. So we really wanted to limit that, to make it as realistic as possible. Now, it is difficult to make it completely realistic, because the sim is not. It's not the ladder that you're going to see in minis or on any futures contract. And we're really trying to create an atmosphere, create a dynamic that people can really think, hey, my methodology will work on a live exchange. Now, in terms of having the payouts for people, yes, we have a good capital structure. We're limiting that, so no one's going to come in and take us down with the 3 copy trades. So we're very comfortable in that regard. And we're really looking at people's trading. Are you coming here to really show your trading skills, your acumen in the markets, or are you just trying to game the sim system, which certainly is something that people try to do? And I think the more copy trading you have, the more suspect you are in terms of trying to game the system, because it's so easy to do that, trying to trade a style that cannot be replicated anywhere in the markets.
So how do the profits move through these various environments? So if I were to start with 5, well, what I'll call evals, I guess you call them audition to live, right? And I succeed. Does the balances there then transfer over to some instant funded accounts, or do I just trade those same accounts for a little while and then I'm promoted? When maybe you could just walk through some of the dynamics. Or if I start with 2 instant funded accounts and I do well, do I carry my balance over to the live environment?
Correct, exactly. So on an instant funded accounts, let's say, for example, you had $300,000 instant funded accounts, and you ran your account up to 10,000 each. Okay, so now you have a $30,000 balance. We're going to pay you $3K per payment cycle per account. So we're paying you $9 grand. You have $21K left. Now, if we think we're seeing something initially very good from you, we may immediately promote you into the futures account, and you're bringing that 21K balance with you into the live futures exchanges market. We may continue for another payment cycle to get a little more data on your trading style. And let's say you run a lot more, you're going to get, again, it's 3K max per payment cycle. So you get another 9,000 against your balance, and then your balance will continue to accrue. And if we decide having conversations with you, I mean, we reach out to people and say, do you feel comfortable to move to the live exchanges now? We've had a number of people say yes, so they've been moved. But if you say, hey, look, I'd like to stay on this for a little bit longer to just make sure my whole processes are correct, then you can remain there and continue with the payouts in the instant funded account. Now, on the audition, if you can pass the 2 stages, on the second stage, again, your profit will be transferred over to the live futures account. So now you'll be moved in there and can trade on the exchanges.
Gotcha. Okay. So then the next question that comes up all the time, what is the trading status of someone that is, I guess, 2 parts. So I want to go back to just a moment ago. It sounds like you're right now providing some flexibility, if you will, in allowing a trader to stay in that sim environment. My experience has been, despite 2 years of people, all these negative comments and everything, you're promoting these sham, sim trading is nonsense. If they're not live, it's not real. And the firms are not aligned with the benefits of any of the traders. And then all of a sudden they got wind of, oh, wow, I should probably stay on sim, because what you just said, it's not real trading. I can get fills that aren't really correct, all that kind of stuff. So now we come full circle. When someone is put into that environment, if I want all 5 exchanges or 4 exchanges, it's $500 a month with you guys? Are you covering that? How are you working with this lovely firm that's called the CME?
Oh, in terms of the cost there?
Yeah, in terms of cost of like, are we really creating professional traders, or are these still technically non-pros that are then accessing a live sub account, or how's that working? It's a very popular question. And frankly, I don't know, because I haven't bought any of these, and my prop money was always old school prop, where I put in quite a bit of money and they just provided leverage.
So no, that makes sense too. But so
Yeah.
what we have a number of brokers that we work with.
Yeah.
They have netting agreements with us, so it kind of brings our margin and makes our capital used more efficiently. So what we do is basically when we bring you over to these brokers, you're trading the money that you have in your profits. We're putting some money up as well so that you have some room, but your P&L is basically your cushion that you've brought forward. So it's not a leverage basis at all, except for obviously on the contract is, but your profit is what your potential drawdown could be. So
yeah, no, I'm referring more just to the costs. Like what are they paying professional data fees to you or to the CME? Are they classified as a professional trader once they're put in a live account at your firm?
Oh, that question. So
yeah,
that the broker handles, and we don't have a role in that. So it's not a pass through from us by any means.
okay.
We're presenting the clients with what the choices that the brokers are giving us, and they can make a decision on what they deem is what they want to have the best. So it's not something that we determine, but it's what the brokers are telling us what the costs are, and it's straight the client's decision what they want to use.
Okay, but just to be clear, those costs are professional data costs per exchange. If I want all 5 costs, it costs me $500 a month to trade at your firm in a live account.
No, I think our cost, we've got it down to under 200 for the people. It's the last number that I saw.
Okay. So there's some. Okay, I gotcha. And but it's really a handoff to the broker, but you're introducing this customer to the broker, and they're trading in a sub account at your firm, right?
Correct.
Gotcha. Okay, cool. So, for my audience, this is still kind of new and nebulous. So I think the answer is always, because what happens, Eric, is a lot of people are multi-propping, as you know, and I pay a ridiculous amount of money to the CME because I do have multiple lot of platforms, and I have algorithmic and quantitative trading running, and they consider every single connection, as you know, to be a professional connection. So the concern that's starting to happen as people progress with these firms, and actually the good traders, their costs are potentially going up quite a bit, because at each one of these firms and each one of these brokers, they have professional data status at each one of these. Now, I still think this is great. This is the cost of doing business. This is what being a professional trader is all about. But there's still a lot of people that are seeing if they can trade at all these firms and still pay $8 a month for data. And I think those days are probably limited.
No, that's 100%, and that shouldn't look. If you want to become a professional trader, whether it's $200, $250, whatever that cost is, that cannot be. If you want to be a professional trader, then, like you said, this is not $8. And I think that's why people get caught into the sim world as well. They're looking at it, how can they trade in a gamer scenario, but also not have any costs, and that's not reality. So I think that's the whole premise of this conversation, is that the whole sim world is not real on any regards, because there's costs involved. Like you said, there's professional fees. I mean, you and I've been doing this for a long time. You know all these fees you have to pay. When I worked at Citadel, my seat, they charged me $800,000 for my seat. I sat down. Right. First $800,000 I met, that's just to pay my rent to sit down every day. Okay, my computers, whatever the case is, $800,000. And some other places were $400,000. Some places I work were $600,000. But that's just the cost. And no one bats an eye, blinks. It's just you want to be in the game, and the numbers that you're looking to make are not relevant to the seat cost, and it shouldn't be relevant to what professional data costs to be involved to be a professional trader.
Yep. When we started block trading, so it was like 1996, and just to get a seat in our offices, because this was the beginning of SOS trading. Remember the small order execution system?
Sure,
the first SOS bandits. We started at 25, then we went to 35, then we went to this is 1996. It was $50,000 to sit at any of those desks and get access to the software at the time to try to fight against Goldman Sachs and Credit Suisse and all these things but this was before decimalization, right? So we've done some miles right now. People don't know how good they have it now. So
No,
stay with $8
absolutely. I mean,
a
you
month
think the
as long
cost
as
of
you
everything
can,
back
but it's
then.
not the future. Go ahead. Sorry.
No, correct. Absolutely.
Yeah.
You're right. When you look back, it was almost, but back then the costs were so high because there was no transparency. And I think that was certainly a key to equity trading in the 1990s, right? When people were doing all kind of different scams because people had no idea because the hurdle to get it. But I don't think the cost now anyone should really be considering. And just if you want to be a professional trader, that's
and it was $10
a
a spin
you should
too.
be focusing on.
$10 a spin.
Yeah, you're right.
$10 a spin.
Yeah.
And I used to look at those commission reports every day, and some people were eating through 20% of their account value in transaction charges every single day. So it was.
No, I remember one year in 1998, I think I paid 25% of my year's profit was commission because it was so expensive.
Yeah, it's pretty wild. All right, now I wanted to get into a little bit of details, right? Because people, a lot of my audience knows these markets pretty well. They like the platforms they're trading on. So it seems like right now you are not offering Ninja as a connection for Rhythmic or Tradeovate. Two-part question: do you plan on doing that? And if not, are you kind of hanging your hat on this Project X, which looks like you white labeled it from Top Step? So maybe tell us a little bit about the platforms that people can trade on.
All right, so the Project X is our main platform, and like I said, we've had a lot of really positive reviews on the people that have joined our firm have been used it so far. Again, I think some of the other things are more for the copy trade aspect of it, and the fact that this is maybe a standalone. I think that's been the only negative thing that people have heard because it doesn't tie in. And I think people want to be able to sling around 10, 20 contracts across 3 or 4 different firms, and this is not going to allow that. So I think that's been
you
negative.
Can copy within. You can copy it. It's a white label of Top Step's platform, correct?
Okay, exactly. Okay. Yes, absolutely.
So
yes.
This is a benefit, folks. Anybody that I think they did an amazing job with that technology, the rollout, everything. I use it on a daily basis. So the copier within it, anyone who uses it will know that the copier within it is rock solid. You don't have to be concerned about it at all. But yeah, it's a closed system. There's nothing wrong with that. And
no, that's exactly that's been the negative on it, that it is a closed system and people. But again, like we don't want to be in that market where we're one of 3 or 5 firms that you're trying to sling 10, 20, 30 minis across every minute with, because I don't think that's reality. I mean, you're not trading that amount of notional, so there's no reason to do that. We want to see, do you have a process? Can you trade? Can you be dedicated to doing this as a professional? And if you can, we want to fund you and get you going.
Okay, but you do support Rhythmic too, I saw, right? So some Rhythmic platforms.
Yeah, we have Rhythmic.
Yeah, you have Rhythmic as well.
So, but that's in our addition to live. So you're not getting immediate payout on that. So if you feel like, hey, you want to show us your skills, and you have other platforms, that's fine, because you're not picking us off on an immediate payout. But if you want to just establish a relationship with us, then that's fine to use it in our addition to live. But from the other platform, we really, I mean, all roads end to getting you onto an exchange, and that's our goal from day one. That's been the goal all from the beginning. So we really want you to show that you can do that. So like we talked about before, the costs, we training style. I mean, these are the things that you really have to know what's happening to make the decision that this is what you want to do for a living.
Gotcha. So for now, it sounds like the vast majority of people are choosing your Project X, right? Web-based, easy to use, familiar. If someone's familiar with where it came from, that's the platform of choice.
Absolutely. Yes.
Okay. And are there any plans to support Ninja or Tradeovate and in extension Trading View, or no?
There are definitely a lot of things in the pipeline now. Like I said, we've only been really going with this for about a month, and we're pushing people. So we're trying to prioritize things, getting people into live accounts. But certainly, we're looking at the landscape of the market, and we want to provide the best resources for our traders and clients. So everything is on the table, and we have internal discussions as to what timetable we can do different things.
Good. So glad to hear it's going to be TickBlaze. Okay, we'll talk about that more later. TickBlaze is one of my platforms, so we'll talk about that more at some other time. that was a very diplomatic answer. I hope the answer would be no. So my hope is that we can remove the plague that is NinjaTrader and Rhythmic and to a lesser extent Trade-Evate from this whole ecosystem, because in my opinion they've been rewarded for lucking into something, and we need to provide more choice to traders and more consistent, reliable.
It definitely was
connections,
lucky.
too.
I mean, look, as you know, they came along not knowing that this was going to blow up, and they attached to a couple of really big firms and grew together, and now have a monopoly, almost like Bloomberg did back in the day on trading desks, right, on Wall Street. So I think you're right. There should be more choices, but you know, we'll see what the demand is from our clients as to what we can best provide for them.
Yeah, and they're rewarding people by never updating their software and charging the prop firms more money, and lots of other fun stuff. Okay, let's shift gears a little bit to since you are offering this IFA, or the instant funded account, which became very popular in light of a recent significant failure of a firm that set the world on fire with this format. You know, do you see any changes coming in the model overall? I know you just got started, so you probably look for a while, and hopefully you can adapt to anything. But I mean, what's your take on, especially given your background? Like, you know, I think you were registered and everything too, right? I was a CTA for a while, an NFA member.
Yes.
So I never know what the regulators are going to do. But how are you thinking this might pan out, or what 2025 could look like for your firm and for the industry in general?
I think, look, obviously the CME has always wanted to make revenue, and having this whole SIM platform is taking something away from them. So I think our NexGen's interest in the CME's interests are aligned. I think regulators are definitely going to look at the blow up and question that. I mean, we have to see legal cases, whatever happens from that, and how much attention that gets. Look, we're going to have a new administration, probably new CFTC chairs and stuff like this. So we got to see how the administration, obviously there's a lot on the table, what changes come in 2025 and how much of a spotlight comes onto it. But I think that's, like I said, that's always been our goal from the beginning, is to get people onto exchanges, as really that's where we want it to be. So I think our goals are aligned with them, and I think traders should want to as well. I think, I mean, when you see the numbers that people were owed, but you're trading in the SIM account, it's almost like monopoly money. Like, how could you be trading in such a fashion, but it's so unrealistic to what the real markets are?
Yeah, for sure. And chirping about you know, blazing the path and doing things differently, and no rules and all kinds of other insanity. So we'll leave it at that. We're here to talk about you, not about some of these now infamous firms that were only with us for a short period of time. Thank goodness. So how about now that you probably have enough data, and you said you've paid out $50,000 thus far, which I like that's a smaller number, not some massive number, right? There are many firms.
No, it wouldn't make sense. Is it correct? Like,
yeah.
I worked at a lot of firms. You worked at a lot of firms. I mean,
yeah.
Like, we used to joke all the time, you know, wives would always say, hey, they would treat our jobs like $100 bills were just lying on the floor at work. But it's hard to make money. I mean, and so when you're seeing these numbers that were getting thrown around, I'm like, I worked at some pretty big outfits, and guys weren't throwing numbers like that around with such a consistent basis. And these were like some of the sharpest guys you can ever meet. So it was pretty mind blowing when you would see these numbers that were going out. So yeah, 50 grand, that's what we paid out. That's sort of a realistic number, I believe. If we were only been doing this for 4 weeks in our instant funded accounts, and you have to have a consistency ratio. I mean, you shouldn't have that high of a batting average. Trading is very difficult. Having a high Sharpe ratio is even more difficult, and being disciplined. So I applaud people for getting so energized by the markets and being focused. I mean, it's been a great bull run, and markets are hot, but the returns didn't make sense. Like, if you were an investor, you'd pull your money back rather than stay in the fund if you saw returns like that.
Yeah, I mean, it's just nutty. And that stuff, again, we started this whole conversation. You must have said it at least 3 or 4 times. The whole goal behind what you're looking to do is to get closer to real as fast as we can get to real, get more traders that understand real margins, and understand how the CME works, that understand how live trading works, all these good things. Because a lot of those numbers, they were the result of not only sim, but just sim, blow and go, trade in two different directions, do all kinds of things that have nothing to do with real trading in any way, shape, or form. So I applaud the fact that you have found traders that with a consistency rule and doing it under a fewer amount of accounts have been able to generate profits. That's encouraging because, as you said, trading's hard. So
yes, no, it's been very good. And when we have conversations with them and we talk to them and we say, look, we've been looking at your data. It's a very good conversation they have. We talk about their process a little bit. What we're trying to do is sort of akin, like all the jobs that I had, there'd be a trading manager. And like if you had bad days, he'd call you in and kind of look at your numbers a little bit. Sometimes he'd give you analysis. Usually when you trade 30 minutes after payrolls, you lose money. But if you seem to wait a couple hours after that, you seem to make money. They kind of dive into your data to help not change your style, but sort of, smoothing out the edges a little bit. And I think that's how we try to look at people's data to see, how they're doing well, how they can improve without changing their style at all.
Yeah. So along those lines, where are you coming in on the educational spectrum in terms of what you're offering? Is it coaching after the fact? Do you plan on offering more education or partnering with guys like me to get people to do these things properly? Where are you out on that spectrum in terms of trader support and helping them out? Do you provide research? Where are you at?
At the moment, we're not doing anything except for these calls, informal calls that we have with people as we're trying to put them on exchanges and kind of say, these are some of the things that we've seen. Maybe that we can help you out a little bit. And we'd definitely be open to anytime you'd like to speak with us to kind of help you out once you're on the exchanges. But I do recommend definitely people, listening to someone like you and coming in with a game plan. I mean, it's not something that we offer, but certainly you should come to speak to Rod because the wealth of experience and information that'll help you. I mean, you shouldn't be diving into this just because you're seeing the bull market and you're seeing it on the news being reported and just want to jump in. I think you should come in and have some sort of a game plan that you can execute and feel comfortable doing.
Love it. All right. Your TDG t-shirt is on its way. Need more. I got a fever for more Dowbell because we tell people, and by the way, quick pitch for Traders Dev Group. And if you're familiar with my channel, I've said this all the time. These prop firms right now are all about just learning how to properly manage risk in a small account and then grow a small account properly. Eric and his team are offering pretty sizable accounts on a notional value. That's 300,000. You can go for those. By all means, if you think you're at that stage, go for it. But for the vast majority of you, choose smaller accounts, treat them as if you put your own $2,000 or $3,000 in an account and establish a daily risk budget and trade micros. Now, your mileage can vary. You can do whatever you want. Obviously, Eric's firm and NexGen are providing similar kinds of leverage than as other firms, which, as I've said all the time, I think they're amazing learning tools. I'm promoting this company and many others, not because I don't like them, but they had to copy a model that started way back with Top Step that unless you're massively over leveraged when you're trading minis. Now you can do it properly. So anyway, if you want to learn more about that, that's what my group's all about. There's plenty of links down below to find out about how we do this. And that's all we do. We just go slow and steady. We trade micros. We trade very small size. And the other last piece of this is it just keeps your emotional capital under control. The smaller your P&L on the upside and the downside, the more you can just live in a flow state where you're not constantly under stress about riding on the knife's edge of losing your funded account and being so concerned with every little rule or every little communication from the firm about, are they doing it again? Are they going to make it more difficult or more challenging for me to actually make money with these firms? So on that, I wanted to dovetail into a question I get a lot. Now, you're a newer firm, obviously, but have you found that you've had to make changes to your rules already? Or because this has been a big issue with other firms, right? They had to adjust to what they were seeing. So based on your trading behavior, do you feel that your rules are kind of locked in for right now, or have you had to make any changes based on trading behavior?
Okay, so we are changing a couple of things in December. We're putting a daily stop loss of 1.75% on the IFAs. Looking at the data that we had during 4 weeks, it seemed like a lot of people were running massive negative risk reward ratios that it's
Sorry,
not going
real
to work
quick,
for
Eric.
you.
That's of the notional value, not of their account balance, right? Of the notional
Correct.
value.
Notional value.
Okay.
Notional value.
Yeah, okay.
Absolutely. All right.
Gotcha.
So 1.75%. Because we saw a lot of people running negative risk rewards, and because they were just using their complete drawdown as their daily stop. And look, I worked at a lot of firms. I would never try to lose more than 50 basis points a day. Occasionally, I'd lose 1% if it was really bad. When I worked in More Capital and Louis Bacon was trading billions of dollars, I rarely saw him lose more than 1% in a day. So I think 1.75% on the daily stop loss is definitely enough, because it'll give you 3 days. If you lose 3 days in a row, then you'll be out. But if you're like, if you have 2.5% and your max drawdown is 5%, you have 2 rough days and you're out, then you didn't even get a chance to show yourself. So I think what you said earlier that led into this in terms of what you teach, and I think what people should try to do is have a position that if we're implementing a 1.75% daily stop loss, that shouldn't even come into consideration with what you're trying to do, because that really is a healthy daily stop loss. Look, if you're in the real equity markets, you're going to be having, say it's your own money, you're going to be having a post margin if you're running positions with more losses on the notional of your account than that on a daily basis. Or they're going to stop you out immediately. You're going to get that call and that you've been liquidated in your position. So I think, it all ties into trying to make it as most realistic as you can to what the markets actually do when you're live on an exchange.
Perfect. So the little shift, though, for my audience that you do have to make here is, so Eric's talking about of a notional. We've all discussed the notional is just there. It's not very real. So on $100,000, that'd be $1,750, right? But
correct.
As he just said, though, 1.75% of your notional 3 days in a row wipes out your entire account. So what we do at Traders Dev Group is we say your daily risk limit, loss limit, we call it our daily risk budget, should not exceed 10% of your total drawdown. Because then if you do that, you would have to take your max daily loss, self-imposed, 10 trading sessions in a row, having never made any money, to actually lose your account. And if you can produce risk-adjusted returns within a 10% daily risk, because this is how small account trading works. It doesn't work, what Eric was just mentioning, like 1% or 50 bips, that's on hundreds of thousands or millions of dollars of positions. It doesn't work like this in a $5,000 account or a $2,500 account. If you were to deposit $5,000 of your own money and we're risking more than $500 per day, and especially trading a mini, you're not even going to last a month. I don't care what your strategy is. You're over leveraged. You probably won't last a month. So anyway, again, you can find out more about how we tell people to do that. But the very rough thing is about 10% of whatever the total account value is should be your daily risk budget. And the only time you ever increase your daily risk budget, you don't increase your daily risk budget when your account grows. You increase your daily risk budget when the average of your 3 best days exceeds your daily risk budget, because now you're actually producing risk-adjusted returns. So you earn the right to take more risk, okay? But you don't earn the right by having, even within a 20% consistency, I'm getting a little wonky here, you can grow an account in such a way that you could say, oh, well, now I can take more risks. No. Unless you are producing outsized gains on certain amounts of days, that's how you eventually increase your daily risk budget. So thank you for allowing
No, Rod,
me.
it's great that you just said that, like, because I'd always have a 5% max drawdown in every firm that I worked. And like I said, I'd risk 50 basis points. So that's 10 days, like you said, 10 days, and then I would be out. So I kind of looked at it like that's very similar. And I would look at my Sharpe ratio, but not versus some static return, like measuring an SSP, but just my annualized P&L divided by my standard deviation of my P&L. And that ties into what you're saying about your 3 best days. So if my Sharpe is higher, then I can risk more. But if my Sharpe is above 2, I can risk more, because I'm showing that on a standard deviation, my P&L is doing better than that, so I can risk more. So it's not that my account is growing, but how is it growing? Then now I can start to maybe leverage up my positions a little bit larger.
Yeah, exactly. So, and if anyone wants to get a little wonky, you can get wonky inside my trade room, where I actually talk about, for these programs, Kalmar is better than Sharpe, because Sharpe is more of a portfolio measurement theory. So I don't know, Eric, if you know John Netto, so he's a friend of mine here he came up with something called the Netto number, which is great, which is basically showing, it's a version of Sharpe, except the denominator is based not on a riskless, interest rate, but more on what your risk budget is. So what type of returns are you producing relative to a risk budget? Not, you can plug that into a Sharp, but anyway, Kalmar or Netto number is a better means of,
Okay.
yeah, look it up. And he's a good,
Okay.
you might want to talk to him. He's just an uber cool guy, brilliant, been trading futures forever. Started as a bookie at like 13 and just has this, and he's a huge Dodger fan.
Wow.
So yeah,
All right, there you go.
he's a big Dodger fan. Okay, I wanted to shift gears here just to talk a little bit about kind of what you want. You've already said a number of times how you're positioning yourself and what you're looking to help traders do and get closer to real trading and to how this all works. But given that you're doing this direct access model, what advice would you give to traders to set realistic expectations about giving NexGen a try? And I'm going to load this question by saying, who do you not want as well?
All right, I guess we could start with that. That's probably easier. I mean,
yeah,
obviously we've had to shut a couple of people down so far. I don't want to say how many, but we have people that are just coming in to game the system. I mean, if you're going to come in to try to game the sim system, obviously it's there to do, but we're going to see it. I mean, this is not, we didn't come from a non-trading background and set this up that we're going to not see obvious things. So we don't want that group to come in because there's no point. We're never going to put you into the exchanges. We're going
and
to
you'll catch them pretty early, I imagine, too, right?
No, immediately. I mean, our systems check through all the stuff. It spits out reports. We see it immediately. That's not what we're looking for. We're looking for someone, probably your client, whoever's coming to you genuinely wants to learn how to trade. I mean, they're not coming here to figure out how to scam sim machines. So they want to come to learn. So you can come to us. We're more than happy to have discussions with you in our Discord channel. We give a lot of feedback on trading. We're more than willing to have one-on-ones with people. It's not a service that we offer, but we're more than happy to do it if people reach out. But we're looking for the people that you speak with that have a genuine desire to put in the work, to have a game plan, to not come in and trade it like a casino or just playing a video game, but to treat it as if I'm trying to trade the markets in a professional manner, because my end result is to become a professional trader.
Right. And forgive me if we got into this, but of the two, of the Audition to Live and the IFA, I'm going to guess that the IFA is wildly more popular. Is that what the vast majority of people are selecting at this point?
It is, because the idea of getting paid within 10 days of opening the account certainly excites them. You could get 300,000 notional if you buy 3 accounts. So all the numbers sound really jazzy. But I think the Audition to Live would probably be the more prudent way if you're looking to make this a serious endeavor going forward, where you can take your time, you could show your styles, and learn as you go along. And it's cheaper as well. So it's going to cost you less to go in. It's going to give you an opportunity to learn how to trade, as you mentioned before. And you're not going to have consistency mandates that maybe are going to be too difficult for you as you start the trading journey.
Yeah. Okay. Fantastic. Well, Eric, we covered a lot of ground here. I really appreciate it. I don't think I said at the outset, you're making everybody jealous by doing this outside. You're in San Diego, right? So not in some far off land. For those of you that are, most of my audience is US based, and so is your team distributed all around, or you have other people that are local in that area?
There's no one around here, so everyone and the rest of the team is jealous as well, because I try to have a lot of the calls outside. But
the boss gets to be where he wants to be, right?
Okay. Exactly.
Yeah. Okay. Fantastic. Well, thanks so much for joining us. As I will have said on the lead-in, we're going to try to put together. We're not going to try. We'll put together something that we hope is kind of compelling for anyone who watches this video within the first 5 days of when it's released. That will be down in the description below. It'll be exclusive to the Futures Fanatic channel. And again, if you're seeing it after 5 days after it's been released, then it won't be there anymore. I'll mention that in the lead-in as well. So, Eric, thanks so much for your time today. It was great getting to know you, and I look forward to sharing NexGen with my audience.
Absolutely. Great to speak with you, Rod. I really enjoyed it. And your audience, I mean, if they're coming to you, they're educated and they understand about markets and they have a willingness to learn. And I think would be a great firm for them to pair up with.
I dig it. Some of them, not all, but you can't control the interwebs. We do our best. Thanks, Eric. Appreciate it.
All right, Rod. Take care.